Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is recognition, measurement, and disclosure concepts. Everything is based on the conceptual framework. And by the way, we have a video about conceptual framework. The video is in our video description. So, recognition, measurement, and disclosure concepts. What do we have here? Recognition refers to the process of admitting information into the financial statements. Measurement. So here we are talking about what? Measurement is the process of associating numerical amounts with the elements. We are talking about how. And disclosure refers to the process of including additional pertinent information in the financial statements and accompanying notes. So, and the general recognition criteria is definition, measurability, relevance, and reliability. Recognition. We are talking about revenue and expenses recognition. Revenue inflows of assets or settlements of liabilities resulting from providing a product or service to a customer. Revenue recognition used to be guided by the realization principle, and we have two criteria. Earnings process is judged to be complete or virtually complete. Reasonable certainty as to the collectability of the asset to be received, usually cash. So promises here, it is not a revenue. I promise to purchase something from you guys. You cannot record it as revenue because it's only a promise. And then FASB requires that we recognize revenue when goods or services are transferred to customers. Okay, I will sell it to you, but I need to produce it now. I will give it to you only in 3 months. So my revenue will be in 3 months. And I will collect the money only in 6 months. We don't matter about the cash collection, but when we transfer the goods or service to customer. And it's the same for IFRS, by the way. And expense recognition, we have four approaches based on an exact cause and effect relationship uh, by associating an expense with the revenue, by a systematic and rational allocation to specific time periods, and in the period incurred without regard to related revenue. We call it the matching principle. We need to match revenue and expenses. And measurements, that is the second one. So remember, the first one, let's come back here, recognition. The second one is measurement. How do we measure it? We have a mixed attribute. GAAP, US GAAP employs it, and also IFRS. The five uh, attributes are the most used one, historical cost, original transaction value adjusted for depreciation and amortization. Net realizable value, we have here for some assets, especially for bio assets. The amount of cash into which an asset is expected to be converted in the ordinary course of business. Current cost, the cost that would be incurred to purchase or reproduce the asset not so used. Present value for long-term assets, the current value of future cash flows calculated by applying the time value of money. And by the way, we have videos about time value of money as well. Look at our channel, you will find it. Fair value, the price that would be received to sell assets or paid to transfer a liability in an orderly transaction between market participants at the measurement date. We have a video about fair value as well. So historical costs. For assets, value of what is given in exchange, usually cash for the asset in its initial acquisition. Liability, current cash equivalent received in exchange for assuming the liability. Long-lived revenue producing assets, equipment, adjusted subsequent to its initial measurement by recognizing depreciation or amortization. Net realizable cost, current cost and present value. Net realizable value is the estimated selling price in the ordinary course of business, less reasonably predictable costs of completion, disposal, and transportation. Amount of cash which an asset or liability is expected to be converted in the ordinary course of business. Current costs to purchase or reproduce the asset. Reported if the economy operates in inflationary economies. We have very few countries who work with current costs. We don't work with current costs in the US or Europe, for instance, and not in Latin America as well. Present value is the aspect number 7. Framework for using future cash flow as the basis for accounting measurements indicates that the objective in value an asset or liability using present value is to approximate its fair value. Very useful for long-term assets. And fair value is the newest one. Originally called current market value, bases measurement on the price that would be received to sell assets or paid to transfer liabilities in an orderly market transaction. We use it for property, plant, and equipment. Fair value can be measured using market approach, valuation based on market information. If we don't have it, we go to income approach, estimate future amounts, and then mathematically convert those amounts to a single present value. If we don't have it, then the cost approach. Estimate the amount that would be required to buy or construct an asset of similar quality and condition. And then it looks like the current cost. It looks like this current cost here. Okay, only if we don't have the other two. Disclosure, full disclosure principle requires that the financial reports should include any information that could affect the decision made by external users. Such info can be disclosed in a variety of ways. Parenthetical comments or modifying comments placed on the face of financial statements, and the most used one, disclosure notes. And we have a lot of disclosure notes and supplemental schedules and tables as well. Here are some summary of recognition, measurement, and disclosure concepts. Please pause this video now and take a good look. So pause it. Okay, now that you already read it, so this is a brief summary about our topic today. Okay, guys, thank you so much. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Please subscribe our channel, like our video, like our Facebook page as well, Accounting Hub by Dr. Scarping. Okay, guys, God bless you and have a very nice day.